Okay, good evening, everyone, and welcome to our personal tax revision session. Some of you may not know me, some of you may know me from our last session, but just in case you don't, I am a tutor from First Intuition Yorkshire Centre. Most of you by now know how to use Zoom, but if you don't, please make sure you are on mute. I have made sure that all of you are on mute, but if you've just logged in, please make sure you're on mute and your video is turned off. It is just because that gives us more bandwidth to play with. And if you have more bandwidth, you may ask me, okay, how do I ask any questions? So you've got the chat service. Use the chat service. If you are on a smaller screen, you will not see the chat icon on your screen at the bottom. You would have to click on more, which has got 3 dots, and under that you will see chat. Use that to ask me any questions. And yes, keep your phone handy with you, because the approach of today's session, it follows on all other sessions we've done, where we go through a Menti quiz just to sort of get the feel, for me especially, to get a feel of where you are with your knowledge point of view. So please have your phone handy so that we can start with Menti quiz. And as I said, I'll go ahead and stop my video so that we can increase the bandwidth and use the most we can. So if you do have your phone handy with you, please log into www.menti.com, and the code that you need to use is 590274. That's 590274. Oh, one more thing. Team, we are recording the session and a recording will be sent out to you. So please try and make the most of the session instead of sitting and writing down everything. Concentrate, and if you have any questions, just shoot it out and ask me right away instead of leaving it for later, because anything that we are going to do in the class will be recorded and sent out to you. So opening my quiz, which now all of you should see. Hi, the number is on the top of your screen, Pazia. It is 590274. It's here on top, yeah. So just go on to menti.com and use that code. Okay, let us start our countdown, as I've got 13 people already onto it. Okay then. Let's start the countdown, and with your question, we've got Todd and Helen. So this question is about Todd and Helen, who are married. If Helen is an additional rate taxpayer and Todd pays basic rate, should they split their dividend income equally? Just select yes or no. Okay, so good to see a majority of you have said no, that is correct. If they are married and one is an additional and the other one is a basic rate, it's better to give it to the basic rate rather than the additional rate, because basic rate will have to pay lower rate of tax. So good on that. So let us see who is on the leaderboard. Perfect. Lydia is ranking 1 at 986 points. Sue, you are not back in. So you are just second at 981. I'm sure you can take. Okay, this is about married couples again. Only receive one personal allowance and annual exempt amount between them. Is that a yes or a no? Okay, no. Every individual receives their own personal allowance and annual exemption amount, irrespective of whether they are married or not. So good on the 13 people who have said no. So let's see if Lydia is still ranking first. Perfect. Lydia, you're still number 1. Sadly, Sue's fallen down, and you've got Alex now, who's on number 2. So this is on the annual exempt amount relevant for your exam in regards to capital gains tax. Is that 11,300, 11,700, 12,000, 12,300, or 12,500? Perfect. Majority have said 12,000. That is correct. If you don't, please make sure you have your tax tables handy with you. Use them. It's in your tax table. Capital gains tax is 12,000. 12,500 is your personal allowance. Perfect, Lydia. You are now ranking 1 with a big difference from everyone else. So let's move on to the next question. Let's see who gets this and if anyone beats Lydia. Which of the following description defines a chattel? Perfect, that is right. Chattel is a tangible, movable property. So anything that you can touch, anything that you can move from place A to B is a chattel. Wow. Sue, you've beat Alex and now you've come second again. Lydia is still ranking 1. So which of the following assets would not be exempt for capital gains tax? Ooh. This one, it is rented property. The question in tax, as I said, is read the question in detail. The question says, which of the following assets is not exempt for capital gains tax purposes? A vintage car is exempt. Cash is exempt. Foreign currency, these are all list of exempt items. Foreign currency for personal use is also exempt. And snake is a chattel which has less than 50 years. So that is, it's called, another word for that is wasting chattel. So wasting chattel is also exempt. The only thing there that was not exempt is a rented property. Think about PPR. You get principal private residency. You get that. Why? Because property, building, house is not exempt for capital gains tax purposes. Please go through that list because that is not given to you in an exam. You need to learn it. Wow, Lydia, you were one of the few who got this answer correct, and you deserve to be in number one. Congratulations, Lydia. You have won our Menti quiz for today. Yes, indeed. Hooray, indeed. Good one there. Again, team, please, I hope this has helped you understand what part of your technical knowledge is something that you need to practice again. Well done, Alex, as well. You weren't far enough. You gave a good fight. All right, then, team. Moving on. What is my plan for a 1-hour session today? The objectives as I sent out in the email. My plan is to do task 8 and task 9. So task 8 is based on tax planning and task 9 is based on capital gains tax basics. It is one of the 3 tasks that is based on capital gains tax in your exam. To show you how the performance is for students based on financial year 18's exam. If you notice, task 8 and task 9 have seen a significant improvement. In fact, compared to 45% in 2018, 60% have passed in 2019. And in task 9, 70% have passed compared to 60% in 2018. So there is a big improvement from students in both these tasks. Both these tasks from your exam point of view are drop-down questions, tick the box, fill in the box type of questions. It is not one of those open tasks. However, reading in detail is important. So let's dig into task 8 and let's see what the examiner first talks about in task 8. So in task 8 is basically a task that tests everything that you've learned in relation to income tax. That is your employment income, property income, savings, dividend, personal allowance. Basically, everything that you've been tested from task 2 to task 7 comes part of task 8 in a complex situation. So what are the strengths? And as I said from the start of this session, reading in detail, making sure you read the question and answer what has been asked. And again, as it is based on complex situations, you need to make sure you have a good understanding of all the tax rules related to personal income and are able to use it in complex situations. Again, if you don't have that sort of knowledge, that is one of your weakness. If Because if you don't have enough detailed knowledge of everything related to individuals, that is your employment, property, savings, and dividends, you will find this task challenging. And again, there's one thing that they've noticed is people guessing answers to tick box questions. So that again says that they don't have the required knowledge. Just make sure, as we've discussed, that we spend time to read the question in detail. We take the time to answer the question by planning your answer. As I said, read what is being asked by the examiner. So I have sent all of you the question as pre-work. So I hope you've had a go at that. So let me just open and let's go through task 8 as an example. So in task 8, a typical exam style question, tick the box, say true, tick the ones that are true. So the first one, we've got Paul, who has shares held in an ISA account, and the first £20,000 of dividend received per annum will be exempt from income tax. Is that true or false, team? False. Perfect. Okay. So we've got a couple who've said false. Could anyone explain to me why they think it is false? Alex and Jan, sorry picking you up, but just testing your knowledge on this topic. Okay, that is right. Okay, so shares held in an ISA account. If you have shares, what you receive, any income from shares is in an ISA account, you are exempt. However, the key word here is the first 20,000 of dividend received per annum will be exempt from income tax. It is not the first. It is a maximum of 20,000 received per annum that will be exempt from income tax. It is not any type of personal, like a relief or an exemption that you get that you can only deduct first 20,000, anything on top of that is taxable. It is a maximum of 20,000 that you can put in. Okay. The next one, all taxpayers, regardless of their marginal rate of tax, are entitled to a £2,000 dividend allowance at 0%. That is perfect. That is indeed true. That is one of the things that you get. Dividends, £2,000, you get an allowance irrespective of what type of a taxpayer you are. Moving on then, you've got throughout 1920, Lenny is provided with a company car with a scale charge of 22%, giving a taxable benefit of £3,960. He would like to change his car for one with lower emissions and is considering one with the same list price, but with a scale charge of 16%. We've been told Lenny is a basic taxpayer. And what are we asked to do? We are asked to calculate the income tax saving for Lenny. We are told to calculate the income tax saving for Lenny. If you have done the answer, please private message me to Q&A and tell me what you think the answer is. Good one. Great. Okay, so we've got a lot of correct answers. That is right. So let's go ahead and let me debrief how you do it. So what is the formula that we need to remember when it comes to car benefit? The formula is list price multiplied by our scale charge, that is our CO2 percentage. Okay, that's question B. We've been told that the list price multiplied by CO2 percentage is a what we call it as taxable benefit. In this question, we've not been given the list price, but we are given the taxable benefit as 3,960, and we are told the CO2 percentage as 20% into list price. Therefore, if we have to use this, we can say that list price by using a maths technique, we can say it's 3,960 into 100 upon 22. Okay, so what we do is take the 22% that is here. It's a multiply. When it goes on the other side, it becomes division. If you do that, you get a list price of £18,000. Then we told that with this 18,000, he's got a new car with lower emissions, but now the scale charge is 16%. Therefore, what is the taxable benefit is what we can calculate as being list price again, 18,000 into 16%. That gives me a taxable benefit of 2,880. Okay, so therefore, what is the taxable benefit saving? Is 3,960 minus 2,880. That is what it was before, 3,960. What it will be if I take a lower emission car, which is 2,880. And when I minus that, I would make a saving of £1,080. But we are told in this question that we don't want to know what is the taxable saving. We want to know what is the income tax saving if Lenny is a basic rate taxpayer. So if that we are told he's a basic rate taxpayer, therefore income tax saving is basically tax on the saving of £1,080. So therefore, this leaves me with £216, which most of you have messaged me and told me, and that is what is the correct answer. So great if everyone has got this. However, I hope this has now made sense to others who did find this question challenging. But if you do have any questions, please ask me now. Okay then. Perfect. So moving on, we've got in question C now. We've got Jim. He is married to Barbara. Barbara earns a salary of £195,000. So that makes her an additional rate taxpayer, someone who earns more than £150,000. Whereas Jim earns only £15,000. So that makes Jim a basic rate taxpayer as he earns less than $37,500. Okay, use your tax tables to see those figures. Then we've been told that Jim also earns income from a savings account of £25,000. Okay, so tick the box giving the suitable advice to minimize the couple's income tax on the savings account. Again, this is in real life. All of you will be involved in giving tax advice. So, which one would you go for? Would it be A, B, or C? Please use the chat service to let me know your answer. Perfect. So I've got a lot of correct answers and they've all said A. And that is correct. And Laura's even put in A as Barbara has no savings allowance. That is right. So who gets savings allowance? Savings allowance is only given to two types of taxpayers. One is basic rate and one is your higher rate. Basic rate get £1,000 and higher rate get £500. So if you're an additional rate taxpayer, which in this case Barbara is, she would not get any savings allowance at all. Therefore, it is best to leave all the savings income in Jim's name as he will get £1,000 allowance and the remaining will be taxed at 20%. Even if Barbara gets anything, she will be taxed at a higher percentage of 45, which is our additional rate taxpayer's tax rate. Any questions from anyone? Lewis has asked a very good question. Why is Jim not a higher rate when he earns total, when his total earns is 40? Lewis, yes, he would, if his total was 40, he would be higher. But in this question, we are trying to figure out what to do with this savings. Therefore, if you want to try and figure out what you want to do with the savings, let's remove that from Barbara and Jim's case and try and figure out where would that fall better. Again, that is 40,000 and 15 plus 25 is 40. And as Alex has mentioned, you will also get to take personal allowance. And that leaves him as not a higher rate taxpayer. Perfect, Alex. Good points there. That is what we need to keep in mind is what are we given? Because remember these words that you need to get used to for this exam. One is called total or net income. Another word, taxable income. Remember, taxable income is after deducting personal allowance, and total or net income is before deducting personal allowance. So what are you given in the question? And then think about it. And overall knowledge. So good point there, Alex, that we need to keep in mind. Thanks for that question, Lewis. That may be some question everyone else may have had in mind, and I'm glad you asked that. Any other questions from anyone else? Okay, great. Of course I can, Madalena. Again, team, I will send out all my workings and everything to you, so you will have that. So you and the recording. So don't worry if you miss any bit. Perfect. Okay. So after task 8, let's move on to task 9, which is on basics of capital gains tax, shortly called CGT. So here, what the examiner says, it is great to see that the students understand the basics of CGT. What I mean by basics is basically, what is CGT? CGT is tax on assets. It is a basic profit and loss calculation where you put your proceeds, you deduct your cost to sell, your purchase price, your buying cost to come to the profit or the loss. In tax, we call it gain or the loss calculation. However, the point that where people fall weak on is chattels. We will go through some notes on chattels and the rules that we need to follow on chattels. But students are very good in some complicated bits like connected person. Remember, when you have a connected person, it is on your proceeds is deemed to be market value, and a connected person is 2 generations up, down, and sideways, is your spouses and your brothers and sisters. And part disposal. It's good to see most people are able to get that right. However, they struggle with PPR rules. So again, team, please make sure you learn your PPR rules and practice as many questions as possible on PPR. So some of the questions that ones we feel challenging that I have given you to do in task 9 is on chattels. So let's just jump into those questions right now. Before we do that, I just want to talk about what is we just said chattel is a tangible, movable property. But what are the rules for chattels? So the rules you remember is through this box. Again, you need to learn this for your exam. So you've got cost and you've got your proceeds. Here you've got less than or equal to £6,000, and this is more than £6,000. And here you've got less than equal to £6,000 and your cost being more than £6,000. So these are 4 boxes that you need to know. The easiest one is where your proceeds and your cost is less than £6,000, which is this box here. If both of them are less than £6,000, your gain is exempt. You don't pay any capital gains tax on such chattels. And the other easier one, if both of them, your cost and your proceeds, are more than £6,000, you will do your normal CGT calculation, where you do your sale proceeds minus cost, giving you a gain or a loss. The bit that gets complicated is these. What if my cost is more than £6,000, but my proceeds is less than £6,000? Think about it. In this situation, are we going to make a loss or a profit? Loss. That's good. So we will be making a loss because my cost is a lot more than my proceeds. So yes, I will be making a loss. Good one there. Thanks for that, Jan. So if I'm making a loss, HMRC don't want you to claim a massive big loss. They say you need to restrict your loss. So how do they go about restricting our loss? We increase our proceeds. So in this case, you deem, so it's called deemed proceeds, as £6,000, and you minus your cost. So thereby you're increasing your proceeds, and that in that way you will be restricting your loss. On the other way, where you have your cost now is less than 6,000, but now your proceeds is more than £6,000. So in this case, it's the other way, as I said, therefore you will be making a bigger gain. So if you will be making a bigger gain, there is a possibility of restricting your gain or reducing your gain, because HMRC are kind enough to give us a formula that you need to use in situations like this. And that is lower of normal gain calculation, or the other one where you restrict your gain. So your restrict gain formula is 5/3 of proceeds minus 6,000. So you can look at it. Here I have deemed my proceeds to be 6,000. Here I am deeming my cost to be 6,000. One caveat to this rule that you need to remember is here, since you're deeming your cost to be £6,000, you will not include any more cost as deduction. So that is like your cost to sell, your buying cost. You don't get to take that as deduction. Okay, as this is a revision class, I'm hoping that most of you know this. But if you do have any questions, please feel free to ask me now. Again, for those who've done business tax, this was given to you in your reference table, and you must have practiced a lot of questions on it. So I assume this becomes easier for you. Okay, so as this is clear, let's just dive into our task 9 question about Samantha. So here we've been told during the year 1920, Samantha sold 6 assets to unconnected persons. So the word unconnected person should give you a sigh of relief, thinking we don't need to think about an assumption of market value as proceeds. So no market value as proceeds assumption, because everything is to unconnected persons. We've been given the cost and the proceeds, and we are told to find out if it's a taxable gain, a loss, or is it exempt. So first one, team, the vase. Is that a gain or a loss, or is it exempt? Perfect. Thanks for that, Lydia and Alex. It is indeed a gain. What is the amount of gain? Remember here, you've got, so take your table. Perfect. That is 1450. But for those who have found it struggling, take the table that we just did. Keep that in mind. Think about it. Where does that fall? You've got proceeds of 6870 and cost of 5310. That falls here. Because you've got cost of less than £6,000 because it's 5,310, and you've got proceeds which is more than £6,000. So you have to do this calculation of lower off. So taking that calculation, we say was 6870 minus the cost to get a normal CGT calculation, which gives me 1560 as gain. However, we take the lower of this and the 5/3 rule, which is 5/3 proceeds minus 6,000. And if you do that calculation, you get 1450, and you take the lower of the two. In this case, it's 1450. So good work, Alex and Lydia, on that. Moving down to chair. What would that be? A loss, gain, or is it exempt? Perfect. So that is a loss. And how much is the loss? $820, Bazia. It's not 860, 880, sorry, it is 820. How did we get 820? Look at this question here. We've got proceeds of less than 6,000 and we've got cost of more than 6,000. So going back to my table where my proceeds is less than 6,000 and cost being more, we do this calculation. We deem our proceeds to be 6,000 and we take the deduction for cost. So coming back to this, they said is a loss. So let me try and do that calculation, which says I'm deeming my proceeds to be 6,000 and I get to deduct my entire cost of 6,820, leaving me with a loss of 820. What about the third one? Perfect. It is a loss as well. Why is it a loss? Now, both of them here, for a mirror, we need to see what chattel rule it follows. Both of them are above £6,000. Perfect, Alex. Therefore, you will follow your normal CGT calculation, which is proceeds 8110 minus cost 9470, leaving you with a loss of 1,360. What about the pen? Perfect. That is a gain. Why? Let's dig into this. We've got pen, the proceeds is more than 6,000, but we've got a cost of less than 6,000. So in this case, we will be making a gain. So if we are making a gain and we have the chattel rule, we need to see where does this fall. In my table, it falls here again, which is my proceeds more than 6,000, but my cost being less than 6,000. So I will use again the lower of formula, and using that formula, let us see what we get. So if I do that pen here, so we get our normal calculation where it's proceeds 7,140 minus cost 5,500, giving me a gain of 1,640. The other rule is 5/3 of proceeds 7,140 minus deemed cost of 6,000. When I do that calculation, I get 1,900. And what we do, we potentially restrict our restrict our gain, but in this case, we take the lower of the two. Therefore, we take our normal gain of £1,640. What about the ring? Perfect, team. That is right. Going back to my box, think about this. My proceeds is less than 6,000, and my cost is also less than £6,000. Therefore, in my table, it is here. Proceeds less than 6, cost being less than 6, it is exempt. Therefore, the good thing is, on the sale of this ring, I'm actually not paying any tax. So that is good. If it is exempt, state it. Exempt, and in the amount, put a 0, team. Please make sure you add something so that the marker knows that you know your work. Perfect. What about the racehorse? Perfect. Okay, some have said wasting. That is right. It is a wasting chattel. We spoke about it. Racehorse is an asset with less than 50 years. Is it a tangible, movable asset, yes, it is a tangible one. It can move. Therefore, it is exempt. And if it is exempt, the tax amount is 0. Alex, it is the response. Alex has just asked who actually monitors that someone has paid CGT or not on a sale. In real life, it is the responsibility of the taxpayer. So if you have made it, you need to disclose it. Yes, that is how our tax system works. We have something called a self-assessment, don't we? So we have to do our own self-assessment and tell them whether we owe them any tax or not. Because if you don't, that is considered as tax evasion, and that is illegal and a criminal offense. But good thinking. I like the way that overall thinking you've got, Alex. That is good. If you put tax to personal real life situations, it becomes so much interesting and you start loving it. That's what made me enjoy tax, because it's so real life scenarios and you can just put it to your real life scenarios and think about it. Okay, how will this work? And if you want, you can use HMRC guidance that is available online. Just Google HMRC guidance and you can get more. If you go into more quirky things and see about all these different quirky rules, which gets very interesting. So yeah, I'm glad you're enjoying it, Alex. Can make out. See, because if you know, your knowledge, your technical, everything goes well and you start enjoying it. It's that positive affirmation that I love it. That's what we all need. You love tax. All of you love tax. That's what I started my day with today, and make sure you keep saying it till you start enjoying it. It is a fun subject. Anyhow, let's move on to the next. Alex, people tend to find business tax harder than personal tax. And the only reason I can think of why people find it that way is just because business tax is not very relatable to our day-to-day lives. Because you don't pay business tax on your wages, so personal tax because you can think about it. Oh, it comes on my wage. That's why. But business tax, personally, I enjoyed it. I've enjoyed business tax more than personal tax. Great, I've got Basia as well. She loves Basia, assuming it's a she or he, but Basia loves it. So I'm sure, Alex, you will like it as well. It's good. It's fun. It's more about businesses. It tests a bit of your accounting as well. So it's good. I love it. Anyways, that's me ranting and talking great about tax, and hopefully all of you one day will continue to do CTA as well. So moving on. Complete the following sentences. You've got a pick list. Sadly, I cannot put that on a PDF, so just put it on the side where you need to choose. In your exam, when you click on this drop down, you will be able to see it. Capital disposals made by charities would be dash capital gains tax. Is it exempt from or chargeable? Perfect, Jan. That is right. It is exempt. The only two that are exempt from capital disposals is your charities and spouse. Okay? Spouse or civil partner. So this one is exempt from. Good one. If a taxpayer sells his only home that he has always lived in, any gain dash be treated as taxable disposal. Would or would not? Would not. Perfect. It is indeed would not. The only time this becomes taxable is when you have cases of part occupation, because when you live for some time and then you move on to another house, remember we did, well, I'm sure you must have learned it, something called as PPR, and that is a type of relief you get for part occupation. And why is that? Because if you have second home, the government wants to discourage people having more than one home. Therefore, they have a tax in place that you pay if you own more than one. But if your main residence that you've lived all your life is would not be treated as a taxable disposal. What about the third? If you've got an asset and it's lost and taxpayer receives insurance compensation for it, would it be treated as taxable or would it not be treated as taxable? Perfect, Alex and Lydia. It would be treated as taxable. Think about it. What is insurance compensation? In a way, it is like I've lost some, you've given something and someone has given you money. It is exactly, Alex, as you have been refunded, or it's like a proceed, you've sold it and you've got money for it. So yes, that's perfect. That is how, if you think about it that way, you'll know that it would be a taxable disposal. Okay. So last question for the day is about Emily, who bought a painting for $68,410 in May 2014. Let's get all the dates, guys. And she was charged 10% commission by the auctioneer. So that, if she's bought it, this becomes my cost. And this 10% becomes more like a buying cost. So in July 19, she sold it for £97,110. So that is my proceeds. Okay, and she spent $2,850 for advertising it for sale. So if I've spent that for sale, it's like a cost to sell the item. Throughout the period of ownership, Emily spent $4,050 on insuring the painting. So she spent that money insuring the painting. That is more like a revenue expenditure instead of a capital expenditure. Therefore, this will be ignored. Okay, but if she gets money from that insurance and that painting was lost, how Alex has said before, that would become taxable. But in this case, she's just paying money for insuring it. That is a revenue expenditure. Therefore, you will ignore it. So taking all this information that I have made notes of, let's go ahead and show the gain made on the sale of the painting. So the gain, again, what is the question telling me that I need to make sure of that we do not use brackets or minus signs. Be careful of things like this in your exam. If the examiner has said not to use it, please do not use them. All you have to do in this case is put the numbers in. So my proceeds I've calculated, well, not calculated, it's given to me as 97,110. And total cost, I have put a note of, so I take my cost of, oops, sorry, team. So my cost here, let me hide this. Okay, so my cost is my cost of 68,410 plus 10% commission. So 10% is on the cost that I had to pay. So that would be 6,841. And we are also told our cost to sell, which is 2,850. So if I add all those together, I get a total cost of £78,101. So if I deduct that from my proceeds, I'm left with a gain, a good gain of £19,009. And that is the gain on which I will have to pay tax on. Again, the question has just asked me for the gain, so therefore I will just stop there and write that answer. Any questions from anyone? Okay then. You're welcome, Stephanie. Just to let you know, if anyone is planning to attend our next week's session is going to be on task 12, inheritance tax, which will be general and death estate. So we're going to do inheritance tax in total next week. So that is it from me, team. If you do have any questions, I am here for another 5 minutes. So please fire away your questions. If not, have a wonderful weekend. Sorry, have a wonderful week ahead and all the very best for your exams. It's not the weekend yet, sadly.